Good day and welcome to Stock News. I'm Robin, and today we're taking an in-depth look at Skyworks Solutions' latest quarterly report, a release that highlights significant challenges for the semiconductor company. Shares of Skyworks are trading lower, down 23.4% to 66.71, following the announcement of its quarterly financial results and a CEO transition. The company now expects second quarter revenue to fall between $935 million and $965 million, with adjusted earnings per share projected at 1.20. While these figures offer some guidance, a deeper look reveals serious headwinds that may impact the company's recovery. A major concern centers on the loss of content from its largest customer, Apple Inc. According to Stifel analyst Ruben Roy, Skyworks has experienced a 20 to 25% reduction in content for the upcoming iPhone 17, a direct consequence of Apple's dual-sourced socket strategy, which now includes Broadcom as a second supplier. This significant loss is expected to severely dent both revenue and profitability for Skyworks, with Roy lowering his fiscal year 25 EPS estimates from 5.85 to 4.69 and drastically cutting his price target from 105 to 62. The consensus among many is that recovery in content orders may not begin until Apple shifts more towards using internally sourced modems, a move that might not occur until the iPhone 18 launches, potentially as late as fiscal year 27. KeyBank Capital Markets analyst John Vinh, on the other hand, has maintained a sector weight rating on Skyworks. Vinh points out that while the flat iPhone unit estimates may balance out potential gains, the company's future growth could depend on expanding its revenue base beyond the mobile sector. He notes that Skyworks is well positioned to benefit from increasing demand in the Internet of Things market, and that ongoing industry consolidation might lead to greater pricing stability and margin expansion. However, Vinh has also adjusted his fiscal year 25 EPS estimates downward from 5.43 to 4.67, reflecting the persistent uncertainties in the mobile segment. Raymond James analyst Srini Pajjuri has maintained a market perform rating, highlighting that Apple's transition to 5G modems is likely to be a multi-year process. This protracted transition is expected to delay any significant recovery in Skyworks content orders from Apple. Although Android sales, which contribute less than 10% of total revenue, remained flat quarter over quarter, Skyworks has managed to secure 5G content for several premium Android smartphones. While this could provide some relief, it is unlikely to fully offset the losses incurred from the decline in Apple content. Additionally, management has indicated that a seasonal decline in mobile revenue is on the horizon, with expectations of a mid to high teens % drop for the March 2025 quarter. Coupled with the ongoing challenges of increased competition and the inherent risks of dual sourcing, these factors suggest that Skyworks faces a tough road ahead, at least through fiscal year 26. The recent CEO transition adds another layer of uncertainty, as investors will be keenly watching how new leadership addresses these challenges and steers the company toward diversification beyond its traditional mobile business. The long-term recovery may hinge on Skyworks' ability to capitalize on non-mobile growth opportunities, particularly in the burgeoning IoT and 5G markets, where increased content opportunities could eventually support a rebound in revenue and profitability. In summary, while Skyworks remains a key player in the semiconductor industry, the loss of critical content from Apple and the downward revisions in EPS estimates by major analysts signal significant short-term challenges. The company's ability to pivot and expand into other high-growth areas will be crucial as it navigates these headwinds. Investors should remain cautious and monitor how the new management team plans to address these issues in the coming quarters. Thank you for joining me on Stock News. I'm Robin. Stay tuned for more in-depth market insights and analysis. Have a great day.